EN Radio 1700. Now, live in studio, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio. And I will remind you, since it is a beautiful Wednesday, Robert Mott, our international wine guru, will be checking in with us as he does every week on this day. Great information shared by Robert all the time, so I think you're going to really appreciate what we have lined up for you today. Yes, of course, it would not be a Ron Siegel Radio Day if we were not celebrating, so we are obviously celebrating today. It is National Olive Day today. Are you going to get some olives? Now, you know me, I enjoy an olive or two. Now, where would you get the olives, or what do you want to do with the olives? Well, to me, it's pretty simple. Those olives, they're going to be going right there in a very, very nice martini. Got to enjoy a nice martini at the end of the day. Not that I'm a big drinker. Well, at my size, you might be considered big at anything you do, but not that I'm a big drinker. It's just some of the fun that I have. You know, enjoy, have a good time, enjoy life, spend it with friends, family, co-workers. And that's why we chat about wine on a regular basis. Robert gives us a little bit of education on wine, how we can enjoy it and be a little bit more educated on it. So we chat about that on a regular basis. Watching the news this morning, the Institute for Supply Management's gauge of factory activity rose to 51.3 in May from 50.8. What does that mean to you? Well, it means that we're just at a little bit of expansion right there. Now, the other issue or the other side of that coin is that construction spending dropped. So what is that telling us? How do we learn from these issues? Now, why do I talk about learning from these issues? Well, it's pretty simple. My focus on Ron Siegel Radio is to get you great information that can allow you to make a good decision, an educated decision for your family. So when we're looking at what's happening, and I've been sharing with you, and it's interesting, one of the things when you forecast, when you look at and study and forecast numbers, one of the things that you're always wondering about is back testing. When I was at Chapman College, now Chapman University, you'd always look at back testing to figure out, do you have the information correct, and where might have you gone wrong? Easy for me to say, where might have I gone wrong? What did I predict incorrectly? How can I do it better? So those are some of the issues that we always look at. So when I'm talking about that, one of the things we look at, and I've said that the stock market, I believe, is poised for a correction, a drop. And I look at that because I believe that the Federal Reserve has really used up, as many people put it, they've used up all of their ammo. They don't know what's the next bullet, so to speak, that they have to put in their chamber. They've been using QE 1, 2, 3, QE eternity, the quantitative easing, where they've been buying back the treasuries, buying back mortgage-backed securities. So they've used that tool. They've gone down to a zero interest rate. They've used that tool. The biggest problem that they're coming across is they're in a big battle. The big battle is the consumer is still afraid to do anything. The consumer hasn't figured out what is going on with the Federal Reserve, what is going on with our government, and how are they going to be able to predict what the regulations are, because the consumer can adjust, the consumer can modify as long as they know what the rules of the game are. When they don't know what the rules of the game are, that's when the consumer has problems, and that's why we end up seeing so much money on the sidelines right now. It's strictly because the consumer doesn't know where the next regulation is coming from. When you get a regulation that is set, The consumer basically is saying, I don't know, I don't get it, so I'm just going to pull back and wait. When we have a normal course of business where whether you like it or not, and I had an interesting debate over the weekend with some folks saying that the reason that the president has done all of these executive orders is because Congress is not doing anything. Well, here's the issue, is doing nothing is actually an act. That is taking an action. Saying that we're not going to pass a law just because it's something that the president wants, when Congress does not do it, that is in and of itself an activity. Now, the president has got a lot of things through, and now we're starting to see in many areas that Congress is saying, yeah, but was it a good idea? We're seeing construction spending dropped 1.8% in April, well below the forecast of a 0.7% gain from the economists. Weakness in April widespread. Residential construction declined 1.5%. Public construction spending fell 2.8%. Highways down 6.6%. What does that mean? Well, when you don't have that construction spending, construction workers don't make money. When they don't make money, they don't spend money. When they don't spend money, we know that the spending, consumer spending, is 70% of our GDP. Now, we saw last week the second reading of first quarter GDP came in, and it was 0.8%, not a very attractive number. Again, basically the economy not moving, regardless of what the politicians want to say. And you can listen to any politician you want to find the answer that you want to hear. But regardless of what the politicians are saying, these are the numbers. They don't lie. They tell us exactly what's going on. So where are interest rates heading? That's where this all bottoms out at. Well, we're looking at oil was just touched over 50 earlier in the week. The Dow is down 24 as I'm speaking to you right now. The U.S. 10-year Treasury is down at 1.841. Now, again, how do you make that work for you? What is the important part of that for you and for your family? Well, it's just an issue of trying to figure out where do you put your money to make your money work, especially if you are a senior and you're living off of a fixed income. That's why I spend so much time chatting with you about my concept, my belief that you really, if, as a senior, you're not going to get that fixed income that you might have been expecting from bonds. You're not getting that fixed income that you may have been expecting from investing in the safest of investments, being U.S. Treasuries. What do? Well, you help yourself from the other side of the slate. While we're going through this, and we have cycles like this in America all the time, and you may not fit this because I know some of you are a long way away from the age 62 need for or qualification for a reverse mortgage. But have some basic information in it so you can help mom and dad and grandma and grandpa get yourself educated. That's why I share this information with you. So you can look at it. And again, many seniors, I get this call all the time, they believe they understand the reverse mortgage, the home equity conversion program. Guess what? It changes. And right now we're in the middle of a comment period where they're looking at changing it again. That change that they're looking at doing again is going to make it a little bit more difficult to get money right away for our seniors. So you need to understand these issues in order to make an educated decision. The other issue that is going to be a major talking point or result of the election. Now, I've shared with you, I speak to many lenders around the country. I talk to senior people at lending companies. And what we've seen since 2009, when we got the Dodd-Frank Reform Act, actually that was passed in 2010, but since 2009 when we had all the problems, and we came up with this resolution that's the Dodd-Frank Wall Street Reform and Consumer Protection Act. Holy cow, if you can say all that. Came into about in 2010. A lot of the issues that are in there force companies to spend, lenders, to spend a lot of money on compliance and regulation. Now, I've been told as much as 1% of a home loan, the cost of your home loan, 1% of your interest rate is going toward the regulatory environment where they're hiring more lawyers than they're hiring loan officers to help you get a new loan. Dodd-Frank, that's one of the items on the agenda for repeal and replace. We'll see what happens there, but you got to keep an eye on these things because it's important to you and owning a home. Yesterday we spoke with Melinda Johnson about how much money, how much the investment, the net worth is of folks having a home. 45 times more net worth if you own your own home than if you are renting. Think about these issues. We'll continue our conversation when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Robert Mott joins us for a little bit of wine chat when we come back. A possible housing meltdown. There are experts on both sides of the fence. We'll chat about it. 4 dates that could have a huge impact on your credit score. Skeptics now accept reverse mortgages, and there's a new reverse mortgage product coming out on the market. You can reach me anytime. Call our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, and on Twitter, @Ron Siegel. If you miss any part of our broadcast, Ron Siegel and the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
What if your family business could help clothe a less fortunate family? Or your restaurant could feed truly hungry people? What if you could help to comfort the lonely? Plant sustainable resources where nothing has ever grown before? Or make a child's lifelong wish come true? What if all you had to do was simply do nothing more than what your business already does every day? Would you do it? Introducing Processing for a Cause, a unique program that turns a percentage of your business's credit card volume into ongoing donation dollars for nonprofit organizations and foundations. Simply switch your credit card processing provider to Processing for a Cause and begin supporting a worthy cause today. The process is simple, and the cause will change lives forever. Processing for a Cause.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report and it is wrong. What are you doing about it? Credit Sanitizer has these solutions for you. 4 dates that could have a huge impact on your credit score. Date open. These are all trade lines. These are items that come across your credit report, and they show up on every trade line that you have. The date the account is opened, the date of last activity, date reported, and the inquiry date or the date of the request. So the date opened is pretty self-explanatory. But the reason that that's important is you're going to see there's also going to be a number called an MOS number. And it's basically giving you the amount of time that the account has been there. You need to look at that to understand if an account has been, the longer the account is, it goes up to 99. It's a 0 to 99. And it's basically, that's the number of months. So anything over 99 months just stays at 99. But there are different benefits. So a 47 to a 48 gives a better score on your FICO. Date of last activity tells the bureaus, is this an active trade line or is it something that's inactive? Because they want to have things that are more current. The reporting date, when is the institution reported to the bureau? Those are some of the very, very important, because you want to be looking and keeping these. That's why I say don't ever close a credit card unless there's a major, major reason to do it. If it's way too much fees or something like that. You don't want to close them, and you want to keep using them and keeping them active. Even if you go and just buy a cup of coffee, buy a tank of gas, and pay it off at the end of the week. Any of those things work to keep it as an active trade line, because the older, the better. That is the Your Credit Matters segment, again brought to you by CreditSanitizer.com. Red wine means it is time for our Wednesday chat with Robert Mott. Good morning, Robert.
Good morning, Ron. How are you today?
I am doing wonderful, and I'm a little confused here, which as a simple person, that can be easily happening. I hear about, in the world of finance, we talk about BRIC nations. We've got Brazil and I don't know, we won't even go into that, but we've got the BRIC nations, right? Then I hear about construction spending down 1.8%, and I know that that's not going to be very good for Brix. And then I see on our notes we're talking about Brix when it comes to wine. We better get a little explanation from our guru here, so help me out.
Okay, that's very confusing for a lot of people. When we talk about Brix in context with wine, we're not talking about the bricks that you see that are the red ones in the buildings. In fact, it's spelled differently. In fact, we're talking about Brix, B-R-I-X, instead of the other potential spelling for bricks. So it's actually a measurement of the amount of sugar in the grape must, or in the grape itself, actually. So a lot of times if you've been to the wine country, or perhaps you got curious and went to a website and pulled up a text sheet for a particular bottle of wine that you were enjoying, and you may come across the word, it's usually related to the harvest. It'll say Brix, and it'll have a number after it, like 19.5, 23. Sometimes you'll see it up to 26 or even higher. And like I said, Brix measures that sugar level in the grapes. It ultimately determines how much alcohol a wine will have. So you can take a look at that, and then you can actually kind of do some math on it. But basically, it measures that potential alcohol, and so each gram of sugar that's fermented will turn to about half a gram of alcohol. Of course, there are different techniques, different yeasts that will change that. But that conversion really looks like, you want to get a rule of thumb on that, alcohol content conversion factor, which really works out to between 0.55 and 0.65, depending on the grape type, et cetera. So roughly half plus. So if you see something that's 26, it'll probably translate to about 15% alcohol by volume or something in that range. So it's kind of a good way to see how ripe the grapes were as well, because as we know, as the grapes get riper, they get much more sugar content in the grapes themselves. So less ripe tends to be a little bit more austere, a little higher acid. More ripe tends to be a little more lush, and obviously higher alcohol. So that's one thing that you can kind of amaze your friends and be that kind of wine geek, and then talk about, oh well, the Brix level when it harvest was this, and the winemaker did X, Y, Z, and ended up with an alcohol level like this. And so that's why I expect the wine to be like, some description. So a nice little piece of information to keep in your back pocket for those wine discussions, or when you head up to the wine country.
Well, the one fun thing that I noticed, because last time I was there, it was a little bit early in the season, and the little gauge that they use, I'm not getting too technical here, the little gauge, it was really quick. They just drop a grape in there and kind of squeeze it, and it's kind of almost like a blood pressure, or not like the glucose monitor. So you can really tell real quick what the Brix number is.
Yeah, it's called a refractometer, and it does exactly what it sounds like, is that you're actually refracting the sunlight through the crushed grape must, essentially the innards of the grape, and through a little crystal, and it gives you the ability, as it bends the light bends differently depending on the amount of sugar and the content next to the crystal there. So it will give you a different indication of what that Brix level is. So it's a handy Daniel device. It's been used for an awful long time. I don't know how long it goes back. I suspect it goes back hundreds of years at least. And certainly, sometimes the simple way may be the best way. It's a lot easier than taking the grapes to the lab and running a HPLC on it, or whatever the heck they do, of some kind of high-tech instrumentation, when you can have something in your pocket, pull it out, and crush a grape in it, and just get a really good indication of what the grape was going to look like when it gets to the winemaking process. And it kind of goes hand in hand with as the winemaker is assessing the grapes. That sugar content really is only one thing they're looking at. So that refractometer gives them kind of that first indication. The next thing you'll see them do is they'll actually taste the fruit. And lastly, you'll see them actually chew on the grape seeds. And that'll tell them how ripe or lignified the actual the grapes grape vines are. And it tells them, for instance, if they chew on the seed and it's kind of this green kind of woody kind of thing, they may feel that the grapes aren't ripe grape of what the Brix level is. But if they chew on it and they get this really nutty kind of sweet flavor out of the grape seed, then they might determine at that point that the grapes themselves are ripe, even if the Brix level may be lower than what they're targeting. So it's one of those many things that they're looking at in the vineyard to make sure that they actually harvest the grapes at exactly the right time to produce that wine that we all love.
Interesting. That was what I was going to ask you, is how much they use of a scientific number like that Brix rating, or if it does take all the other expertise and experience of actually tasting and chewing and looking, or is it just real scientific? That's a great explanation. I appreciate that. Let me ask you this, though, because one of the other things that we know is questions. When I saw that, I was up in the Paso Robles area. What are the difference in the names? Does a name the AVA of a area, does that mean something price-wise? How does that affect the whole winemaking and marketing process?
Yeah, it has a huge effect on all of it, to tell you the truth, Ron. I mean, AVAs can be very large, and AVA stands for American Viticultural Area. And by the way, that's a region defined by the United States government, the Alcohol, Tobacco, and Trade Bureau, or TTB, formerly known as the Alcohol, Tobacco, Firearms people, but they got a bad rap a few years ago, and they had to rebrand themselves like everybody else does. But anyway, the AVAs can be as large as an entire state. For instance, California is an AVA. Within California, there are sub-AVAs, sub-appellations. So you have Napa Valley. Within Napa Valley, you have sub-appellations. You may have St. Helena is its own appellation. Yountville. There are definitely certainly sub-appellations within within sub-appellations, and then sometimes you get people petition particular vineyards as well. But it's a very complex process to get an AVA defined. As I said, the U.S. government comes into it and has to be convinced that the area has historical significance, geographically distinctive, and unique when it comes to things like soil, climate, and elevation. The very expensive and detailed process to go through. It calls testimony from different experts, historians, engineers, meteorologists, and, of course, attorneys. That's what makes it really expensive.
Doesn't it always?
It can take years to get it done. But as you kind of pointed out, it's something you can definitely put on the label. It's a legal thing to put on the label. TTB monitors that, whether or not your grapes actually come from that particular region or that particular AVA, and it can actually make things much pricier. For instance, if you have an Oakville Cabernet from Napa Valley, it may be a little pricier, perhaps, or demand a little higher price in the market than perhaps a Cabernet that just says Napa Valley, or even more generally, a Cabernet that just says California on it. So it's something that, keep an eye on those AVAs, because they do tell you something about at least the quality of the grapes that go into that, or the quality of the land and the uniqueness of it that goes into that particular wine bottle.
Interesting. I'm going to have to pay a little more attention to that. Great information, as always, from Robert Mott. We appreciate you joining us every Wednesday. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, a possible housing meltdown? Really? And skeptics now accept reverse mortgages. There's a lot for us to chat about here. You can reach us anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, and on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Is your credit score over 800? Are you living in the home of your dreams, or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel lending team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Are you ready to overcome your biggest blocks with money and time? Your solution? Big Profits Now World Summit. The best skills and strategies to double and triple your business profits without doubling or tripling the work. This summit has gathered 24 experts specializing in business growth. It's a free online event that's happening now. Go immediately to claim your free ticket at BigProfitsNowLive.com. Enter your name and email and receive these free video interviews directly to your inbox. Again, that's BigProfitsNowLive.com.
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 0186945.
37% of American homeowners believe they have over 20% equity in their homes. Fannie Mae tells us 69% of American homeowners have over 20% equity in their homes. Fully 1 in 3 American homeowners are not informed about the amount of equity they have in their homes. Are you one of them? How might this be holding you back from achieving your goals? Text RSR CMA to 79564 to get a property valuation from one of the area trusted professionals of Ron Siegel Radio. Again, to know how much your home is really worth, simply text RSR CMA to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. When you want the true equity position of your home, all you need to do is text PEAR, Professional Equity Analysis Review, Professional Equity Analysis Review, PEAR, to 79564. One of the trusted professionals in your area will reach out to you. These are real estate professionals, not from a central location or a computer model. These are humans that are going to be in your area. They're people that we have chatted with, we have communicated with. They understand the information. They understand what we want to be delivering to you. And then they're going to tell you what your equity position is. You can't get that on the online systems. The reason you can't get that is they need specific data that you have to provide. And it's all information that's publicly available. You just have to have it. So here's the easy way. Just text PEAR, Professional Equity Analysis Review, to 79564. A possible housing meltdown. There are experts that agree, some disagree. We want to let you know that rumors of a new market meltdown are not based on reputable data. And as proof, I'm going to give you some comments from some experts who have a totally different view on the current housing market. Again, not Ron Siegel Radio experts. Lawrence Yoon, chief economist at the National Association of Realtors, and I'll quote, "In spite of deficient supply levels, stock market volatility, and the paltry economic growth seen so far this year, the housing market did show resilience and had its best first quarter of existing sales since 2007, unquote. Jonathan Smoke, chief economist at Realtor.com, and again I quote, "We had a triple crown of April home sales reports, so 2016 is the pole position to earn best year of home sales in a decade," unquote. Andrea Rickwire, and I think I pronounced her name properly, Market Watch housing reporter, "I'm calling the end of the housing recovery on to expansion." Freddie Mac, despite the disappointing economic reports, we still forecast housing to maintain its momentum in 2016. And I'm not going to read all of them to you. Wall Street Journal reporter, Fannie Mae reporter, all these different organizations coming out with reports right now talking about the benefit of housing. And one of the reasons I point to the benefits of housing is because I also chat with you on a regular basis. We spoke about this yesterday with Melinda Johnson when we were chatting about how beneficial real estate is, how much safer it is. Now, you can look at any type of an investment and say on a short-term basis there can be ups and downs. Real estate is no different, and I certainly do not make any guarantees to anything. Right? What we can do when we talk on radio or in person is we can talk about what history has been. History has shown us that real estate is probably one of the best asset classes. And there's a couple of different reasons why I am so excited about real estate as an asset class and some of the new things that are coming out. Real estate just so happens that it's one of the few asset classes that you can invest in long term and leverage. And what is leverage when we talk about that? Because I don't like to get too technical. You don't have to put 100% of your money into a real estate transaction. You can have more money working for you than the cash that you deposit. So what do I mean by that? Very, very simple. When you buy your own residence, You can be putting down 0.5%. A VA loan has no down payment under certain circumstances. You've got an FHA loans at 3.5% down, and anywhere up from there. But think about, again, 0.5% with down payment assistance, 3.5% on FHA, 0 down payment on the best loan on the market, I believe the VA loan, if you qualify, if you've served. So think about those things. Now, let's just use 10% because I'm a simple guy. When you put 10% down, you buy, say, let's just use a simple number, a $400,000 house, you put 10% down, $40,000. You have $40,000 at risk, so to speak. You're liable for the whole thing, but you've got $40,000 is what you've invested. If that property goes up, CoreLogic tells us that they're anticipating a 10.2% appreciation in California in the next 12 months, 10.2. They may be right. I'm not going to dispute their number. What I am going to say is I'd like to be a little more conservative. So let's say 5%. Because that's been a historic number. We can look back many, many years historically and say 5% California is a fairly safe number. Okay, so let's look at that and say a $400,000 house, you put 10% down, $40,000. It appreciates by 5% this year. That's a $20,000 appreciation on your $400,000 out-of-pocket investment. To me, that looks like about 50%. 20,000 off of 40,000, that's 50%. Now, I know you got to look at different ways of doing it for different calculations, but I don't know if I go and buy Apple stock today, if I can look at it, basically, you know, it's at $100 some a share. I haven't looked at it this morning, but it's roughly in that range. So you look at $100 stock, is it going to be, if I put $40,000 in there, can I see $20,000 appreciation again if that happens? I mean, again, we can't promise, but hypothetically for educational purposes, can we expect that? I'm going to suggest probably not. If it happens, that's great, but I'm going to suggest probably not. That's why I like the real estate so much, because if you want to, you can't get $400,000 of Apple stock with $40,000. Doesn't work that way. Whereas a piece of real estate, you can legitimately buy that piece of real estate, a $400,000 house, you can buy that with $40,000 out of pocket. Now, I understand there's other expenses involved. If you've got a great real estate agent, such as the ones that I tell you that we work with and we recommend you. Again, I've got a real estate license. I have never bought a piece of property for the benefit of somebody else. I refer those to great real estate agents, even for myself. I think it's just the right thing to do. I've got friends who will say to me, Ron, you got a real estate license. Why can't you do this for me? It's because I believe very, very strongly that a great real estate agent does not cost you money. A great real estate agent is going to bring additional value. We've talked about that. I'm not getting into that today on today's broadcast, about those people that think that they can just do it on their own. I have a friend of mine who's a real estate broker. He's got a broker license, but it's not what he does. He's in a different kind of business. And he said, well, Ron, I'm just going to put my property on the MLS and let it fly. I can do the paperwork. And I said, buddy, you're way off base. Do you think that a real estate agent, a real estate broker can do what you do part-time, spare time? He said, no, of course not. I said, so why do you think that you can do what they do part-time, spare time? And good point, Ron. It makes a lot of sense. And I just suggest that because there are nuances. People that have had their real estate license for 10 years and are not active, not doing this on a daily basis, maybe they don't know that the real estate contract changed significantly in November. Maybe they don't know that there are items that are mandated. I just heard an attorney, a real estate attorney, probably does not deal a lot in residential real estate, but asked his client why they were doing a natural hazard disclosure. And do they have to? And actually recommending to the client that they shouldn't do it. And the broker that's actually handling the project said, You know, it's something that you can't opt out of as a seller in California. Now, do you know where to go to get a natural hazard disclosure? I suggest most people don't. Some people don't even know you have to have it. These are the reasons why you want professional guidance. That's why I recommend, again, it's real simple. Text PEAR, Professional Equity Analysis Review, to 79564. We will have one of the area trusted real estate professionals reach out to you and get you the equity in your home. That way you can make a decision. And we'll talk about the decisions when we come back. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. To reach us, call our off-air number anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Isn't it time you found out the truth about FHA-insured home equity conversion? No, it's not your grandfather's reverse mortgage. This just may be the finest financial planning strategy available for all homeowners of retirement age. Helping protect what you've earned is the job of your board of directors with continued education. Major research has shown that using a HECM will significantly enhance the success rate of a retiree's portfolio and legacy. Please allow us to educate. For your complimentary consultation, call Jay Kaplan at 949-300-3855. That's 949-300-3855.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com, or simply call 800-306-1990.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
Now at San Diego McDonald's, large soft drinks are only 89 cents. Quench your thirst and choose from a variety of icy cold soft drinks for just 89 cents. Only at San Diego County McDonald's for a limited time.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by VIP Mortgage. When you are ready for that next home loan, VIP has the products that you are probably looking for. They've got everything from their down payment assistance program, VA loans, the VA interest rate reduction loan, FHA streamline loans, just to help you get your payments down without doing a lot of the extra paperwork. VIP, they've got the products. Give me a call, 800-306-1990. I'll put you in touch with them. Reverse mortgages. Skeptics are now looking at the program a little bit differently, and maybe they're finally catching on. We've been talking about the reverse mortgage for many years on Ron Siegel Radio. And the reason I talk about it so much is because I am a big believer in it. I have looked at the numbers. I've looked at the exposure. And again, as I shared with you earlier, maybe you don't qualify. Maybe you're not 62 years of age or older. But I submit maybe you have a parent, grandparent, aunt, uncle, loved one, and they may be getting some bum information, because a lot of people are still talking. When I hear about people with questions, a lot of them come back to the myths that were around in the 1980s, believe it or not, where you're losing your property. The reverse mortgage program is changing, and it changes all the time, just like every other program. Right now, I believe that the HUD, Housing Urban Development, really wants to slow down the amount of reverse mortgages. I don't know why they want to slow them down, but they're making some changes to the program. Some of them are quite attractive. Some of them I really, really believe in. There's a proposal to lower the interest rate caps on the program. What does that mean? So the more popular program is the adjustable rate reverse mortgage. And again, every senior, in order to qualify for this, lived during the 1980s. They remember double-digit interest rates. So frequently I get seniors that say to me, Ron, I only want to have a reverse mortgage if it's a fixed-rate loan. And I understand that. There is that product out there. I don't recommend that. In most instances, there are certain instances. If you're using a reverse mortgage to buy a property, that makes a lot of sense. But in many instances, the reverse mortgage, you're going to get better value, better opportunity long term by using the adjustable rate program, the adjustable rate product. Well, HUD's proposing a lower interest rate cap. So if you start, say, 3.5%, the most that could go up is 5 points. So it can only go to 8.5%, whatever your numbers are. I don't know your numbers. They're also looking at limiting how much it can go up on an annual basis. These are items that really mirror the other FHA programs. If you get an FHA forward mortgage, they have the same thing, a 5-point cap, 1% maximum increase per year. Really makes it more beneficial for the loan holder or the borrower, because interest rates go up. When they go up, they go up quickly. When they come down slowly. So it gives a chance, if you can only go up 1 point a year, 5 points maximum, it's going to take 5 years to bring that all the way to the top of the scale. And the economy may have changed in that 5-year period, so you may not ever get to that top. I don't know, but you may not ever get there. The points that are going to slow down the program is, if you remember, they brought in some issues. One of the big problems with the FHA loan recently was seniors would get a lump sum of money, and many of us, if we get a lump sum of money, we go out and spend it. Well, the seniors had built up equity in their property to use for their retirement over their lifetime, and all of a sudden they're at a point where, no, they can't do that. They don't have it because they spent it on a lump sum. They went on a cruise or 2 or 3, maybe did some home improvements, and now the money's all gone. So one of the recent changes said you can take out a certain amount of money, but there's probably not going to be able to access everything. Take some now, some next year. Well, they want to extend that. That's part of the changes. They want to extend that over a longer period, so the seniors getting money doled out to them slower, so there's less likelihood of default. How do you default on a reverse mortgage? Well, the only ways of really defaulting on a reverse mortgage are by not paying your property taxes, not paying your insurance, and not maintaining the property. Basically the same ways that you could default on any other loan, Because if you have a forward mortgage, if you don't pay your property taxes, you could go into default there too. If you don't pay your insurance, generally the lien holder is going to pay it and charge you for that because they want to make sure that the property is covered. So the other myth that I wanted to go back, I didn't mention it, is that with a reverse mortgage, you're not giving up the property. And for those of you that are young people out there that are worried that you're adding the interest to the loan amount, well, the property is generally, not always, but generally going to appreciate quicker than the loan is going to grow based on the deferred interest. So, and there's some formulas and there's some numbers that we can lay out for you. I just want you to understand you're not giving up the equity. So if grandma wants to make sure that she's giving the grandchild a nice inheritance, they want to have something to leave them when they pass, well, the reverse mortgage is not going to really hinder that, but it does make some security issues for grandma. It's also going to help protect the equity for the heirs. And the heirs always have the right to, once the last senior departs the property, either by choice or through passing, the heirs have the right to buy the property from the estate or refinance or do whatever they want. They could, here's the reason I say buy the property, is because if the property's underwater, you buy it from the FHA insurance at a discount to what market value is. Otherwise, you just refinance it and the estate still owns the property. The lien holders never own that property. So that is some changes. There is AAG is coming out with a jumbo loan. They're going to be bringing that out as well because up to this point, the maximum that you can use as equity has been $625,000. Now, the home may be worth more, but they only count the valuations and the percentages based on a limit of $625,000. AAG apparently is coming out with a product that will go up higher. We don't know all the specifics of that product yet. But again, give us a call, 800-306-1990. I'll put you in touch with the reverse mortgage experts that we work with. That is the Mortgage Minute, again, brought to you by VIP Mortgage. Now, I was sharing with you before the break the concept of what you can do with property, with your equity, with your appreciation. There's some new loan products that are coming out that will basically allow you to cash out. And again, remembering math. Okay, I want you to understand when I was chatting with you earlier about buying that piece of property that's going to appreciate, hypothetically, we were talking about CoreLogic's 10.2 forecast, and I was saying that, what if we only use a 5% forecast of appreciation? And we're talking about that $400,000 property. $20,000 a year, what do you do with that? Well, over time, my suggestion is, and I am not a proponent of owning real estate free and clear. Not a proponent of that. I believe that almost everybody I know, there's very few people, but almost everybody I know still want to make more money. They want to earn more money. Bill Gates has boatloads of money. He goes to work every day. Warren Buffett, boatloads of money, goes to work every day. So even the ultra rich, they're trying to get ahead. They're trying to get more. So my commentary there, my thought there, the reason I bring this up to you is there's only really two ways to make money. One is to work off your own back. The other is to have your money making money for you. So when you've got a $400,000 house that you own free and clear, you've got $400,000 of equity sitting there, and there is a 0 rate of return on home equity. If you were to take that $300,000 out and invest it, say, in another piece of property or two other pieces of property and rent those out, you may end up having a positive cash flow. I hope you do if you work it properly. You may end up with a positive cash flow on the rental side of it. But now you've got additional properties that are appreciating instead of the one property at $400,000 appreciating hypothetically at 5%. So say you take that $300,000 out and you buy another $400,000 property, put $200,000 down, and another one, $400,000 property, put $200,000 down. You've got $1.2 million in real estate holdings that are now appreciating at 5%, hypothetically. So now you've got $60,000 a year in appreciation. Think about that concept. That's why I'm so bullish. I'm so excited about real estate and some of the new products. If you went and bought a home or bought a piece of real estate in a self-directed IRA, and up until this point you had to put 100% cash to buy that property, you have it in an IRA to protect your money, to save for the future. Let's talk about how you might be able to access some of that cash and buy another piece of property. And one of the things you obviously need to do, in my opinion, is set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions, call me anytime, 800-306-1990, 800-306-1990. And remember, make a lot of money, help a lot of people, have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
XAPA 1700 AM, kita ke Bata Lipona.
You're listening to ESPN Radio 1700.